Alrighty. Ready, set, check, check, check. Let's see. Actually. Testing, testing. Let me know if you can hear it. I think you can. We should be good. is my... No. We're getting there. Okay, cool. We're in. I think we can... Audio looks good.
Yep,
Everybody's
I
good.
got audio.
Steven's in. Hopefully no echo. Cool. All right, well, welcome. Monday morning meeting as you and my secret voice chat. It's Jesse. What a dingbat. Do I have to... Yeah, anyway, so here we go. I don't want to be too long, but I think we got a lot to cover. We have a huge week coming up this week. Not so much Monday, but the back half of the week is going to be big. So let's get to it. Before we start, just got to point out, we might find some options trades. We're an options trading group. Before you start trading, just want to point out that options are not for everyone, and you should call 1-888-OPTIONS right here to get a copy of Characteristics and Risks of Standardized Options. And they will send it over. There's a link too. But do that before you start trading. So every week we go through this, and we want to look at what's a Jackman? We want to look at what headlines are influencing the market this coming week. Sorry, my voice is kind of, I'm coming down with a little something. I don't know. It sucks. Can't ever get rid of this. So what headlines are influencing the market or likely to influence the market this week? What are the biggest things to watch out for coming into the week? And really, like, how do we want to kind of trade around it? Towards the end of this, we'll take a look at the indexes, whatever you want to call them, and maybe find a couple trades that we can take a look at. So if you guys have any trades, there he is. If you guys have anything you want to look at, shoot them in the comment section of the chat, and we'll jump through them. We'll take a look live. So headlines. Really, I saw a lot of stuff on Russia, man. I don't know if anybody was watching, but dude, one of the funniest ones I saw, I don't remember what channel, it was probably CNN, Pelosi going over to look Ukraine, to Kiev, and talk to the presidents. And I was like, oh god, here we go. But I don't, were they wearing jumpsuits, like hoodies and stuff? Did you see that? And
Didn't see that. No.
And she was all dressed up in her typical, business suit, what have you. I just thought that was like, oh, I don't really know what to think about it. I probably shouldn't comment, actually. So I will not comment any further on that. There were a handful of headlines, really mostly like Bloomberg, things like that. That's where a lot of this comes from. It's just like Bloomberg, Wall Street Journal. What are larger funds and smart money, let's say, really reading what's influencing their decisions? We want to take a look at that because retail really doesn't control the market. So we want to know what those guys are thinking also, and that's what we're doing. So their potential nuclear attack warning, I guess, from Russia, and there was a couple on. So Russia, I guess, cut off gas was the headline I grabbed, but I saw a lot of natural gas from Poland and Bulgaria. So there's maybe take a look at our UNG type plays. I haven't seen them recently. I was in some Tellurian and EQT for sure that I actually started to trim. But we'll see. I'll take a look at it. We'll put that on the list to check out. I had a lot of hedges in general, typically on commodities. And what I've been seeing right now is like this gold price action, gold miners, GDX, things like that. That is killing me. Like, I was like, it makes no sense. And then I'm like trying to dig around, and I found articles like last month that I totally missed. So Russia had built like $140 billion stockpile of gold right here. And the headlines last month were like, oh, he's not able to sell them. But I think probably what we're seeing is that this guy is probably selling his gold to pay for whatever he needs to right now. So he's probably dipping into that, and that's likely, my guess, affecting some of the gold prices, because they're not typically in this environment. You will see gold prices uh, what do they call it? They call it like a flight to quality. You'll typically see gold go up, uh, and GDX also. I think oil is going to be pretty flat for a while. It was a huge move that it's got to digest. So um, likely for like a long while. wearing wearing tracksuits. Yeah, that's what they were wearing. Too funny. And when we go through this, we actually track like what are the Dow 30 components, like the largest 30 companies in the Dow. How are their earnings tracking? And there was a lot of stuff kind of over the weekend on like, is this peak earnings, right? So what's been really influenced the market? Inflation, Russia, oil, right? Or let's call it gas now. Gas. Um, yeah. So the only things that we usually have to fight that are earnings. And if we, which is like the lifeblood of the stock market, and if earnings are dying out, well, yeah, that's tough. And there was one article, I forgot what it was, Deutsche Bank was like, we talked about last week the Fed trying to get to uh, neutral meaning where the inflation rate is equal to the interest rate, and they just straight called it out, looking 5 to 6% Fed target rate, and in that effort, likely a deep U.S. recession. So that was a straight up headline. I think it was Bloomberg also. Yeah, Bloomberg. Yeah, rough. So I don't know if we're gonna have it or not, but just know that there are a lot of those fears happening right now. Um, we'll go through into some of the numbers. We talked last week about watching for Friday's PCE number, and the core PCE was like spot on, and I'm like, what's going on? And when you looked at it a little bit further, it was not the core; it was the regular PCE that actually came in higher. So personal spending still higher, and on top of that, a huge jump in employment costs. So we'll take a look. Here's the major things that I was looking at. So this is last week's economic data. We wanted to, I don't know, we, whatever, wanted to see a slow in like pending home sales, things like that. Yeah, didn't actually get it. So we got a 4%, down 4% the prior month on pending home sales, and down 1.2%. I mean, it's not a huge jump. New home sales slightly lower, and then this is the other thing: retail inventories. So retail inventories would be the this is X auto, so like core. Anyways, uh, they're stocking up still. So retail's still building inventories because we're still spending. Um, Another thing I was looking at, we had that huge drawdown in oil last week, so we actually put a little bit back in, but. That might be on watch this week. So I honestly, oil, it's gonna be a rocky ride, I think, for a while. And right now, as long as we're doing the strategic reserve withdrawals, that's gonna artificially likely keep oil prices low until we stop. And at that point, we'll probably go right back up to where we came from. I mean, we had GDP growth rate come in negative. I don't know why anybody was really surprised at that, but I think that started the beginning of the end of the stock market last week, and this is where we actually came in. So the core PC month over month, personal consumption expenditures, that's spending for retail. That was flat for core. So core does not include the important stuff. It doesn't include energy and things like that. Oil. When you do include that, that's the regular PCE. I don't. This is stupid. I don't know why they. Anyways, it gets me every time I see it. The standard PCE was at 0.9% from 0.5, so there's almost a double. Yeah, that's not slowing down. And honestly, clearly, most of it's coming from oil, gas, and food. So those are the things they don't count in the core. They say because it's too volatile, but dude, look at how big of a component that is. I mean, whatever. Long story short, we're still spending, and that is not peak inflation then. So likely a little more downside. Don't want to prognosticate. Employment costs. This was a huge jump. So I think, typically this Friday we'll have non-farm payrolls, and that's typically the most important number of the entire month. I think this month will be a little bit different and moving forward for a little while, especially with all the interest rate stuff going on. We do still have it. I still think we'll have, significant weight on where we go. But I think that Wednesday, that's really going to be, I just sold something out. Wednesday is going to make or break the market, man. I mean, make or break the entire market. So we'll see. This is earnings review. So we tracked the top 30 Dow Jones companies. So far, we've had 24 report. This week, in general, we have almost 1,500 earnings across the board. So we're still heavy earnings season. So we do trade earnings quite a bit. I run a course every quarter. I got a bunch of people pinging me. I only run it once live. I don't know if I might decide. If you guys want to do something and you missed it, just ping me. And if I have enough interest, I might do release a quickie version of it. But we'll see. For now, I'm in with the group and we're trading and having a lot of fun, man. I believe we just have Pfizer this week, but I didn't confirm. I can take a look. But as far as the Dow 30 components, the large companies, most of those have already reported. And so the big guys are pretty much done, and we start winding down from here. But what you can see is okay, we had 1 miss, 2 miss, 4 misses. We're not quite through, and we've already got 3. So this is this peak earnings, right? Overall, the Dow is doing decent, doing good, but comparatively, right? But if this is the beginning of the decline, well, with interest rates going on, GDP, yeah, that's the recipe that I think the market as a whole is kind of just trying to juggle. And again, it's not if we're going to raise rates, it's really how fast are we going to raise rates. This is the highlights, right? So Wednesday we get the actual FOMC rate decision. Friday we do have non-farm payroll, and again I see Friday we have these 4 Fed speeches, boom, 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 back to back, all day long. So I don't know what's going on there, but who knows, right? I think, the Fed's mandate is twofold, right? It's one, to really stimulate full employment, right? Or get us to closest to full employment as they can. I think they're there, right? If you look at our NFP or job numbers, I mean, we're basically pre-pandemic, very close to. And there's, if you look into the JOLTS data, which we'll get Tuesday, there's a quits number inside the JOLTS data. So the new jobs, which we know that there's many, many jobs available, but the quits data is actually going up. So people are getting pretty selective. Yeah, it's we'll see, right? So if they're able to be that selective, that means they're able to make more. They can get jobs wherever they want. And if they're making more, then they're spending more. And yeah, how do you manage that from an inflation perspective? That's really the situation. The other one for the other Fed mandate is really just to keep inflation at neutral. But, he's right now, if you gave the Fed a grade, it's basically an F. I mean, it's not, I don't know. I mean, I think I'm going to stay out of it. But they did what they did in the recession, in the pandemic. We got through it. But now it's mostly just about how fast are you addressing the current situation or the backlash. Powell's been saying, oh, we're going to get aggressive. The market's screaming to the Fed, get aggressive. At least there's no more, doves on the Fed. But then I think the last rate decision he came out, and it was 25 basis points. That's not aggressive. In what world is that aggressive? And if we're sitting at 50 basis points now, and we're trying to get to neutral, sitting at almost 7% inflation. And you're going to do a 50-point basis hike again? Like, there's a huge gap to be filled. And at that rate, it's going to take years. So aggressive to me would be at least 75. And what's most important is, and what the market's going to be listening for, is that roadmap of what, not this one, but what is the what is this, like, the next rate hike's going to be? Are you going to stay at 50? Are you going to go higher? That's what the market wants to hear. The market hates uncertainty. And so they don't know, nobody knows. Are you going to do what you say you're going to do? Because you really, right now, haven't been doing what, like, where's the aggressive attack on inflation? I don't know. Are you going to do what you say you're going to do? Are you going to get this under control? Or at least, even if you're not, what the hell's the plan? That's the thing. They need to know the plan. The market wants to know the plan. So until we have a clear trajectory of the rate hikes and what the actual plan looks like, it's going to be choppy. I don't know direction-wise, but it's going to be choppy. So we want clarity. And until we get that, expect a rough ride, unfortunately. That's my 2 cents. So I like to play earnings in this time of chop and whatever. Those are going to be pretty market independent. So come trade with us if you want to do that. Otherwise, it will be a day trader's market. Swing trading, unless you're doing spreads, is going to be a little rough. And even then, we're pretty oversold in some, I hate that term, but like due for some bounces, let's say. So just careful. Today we got some data. I don't think any of this data really is not market moving. I ran a little bit late putting this together, so I didn't put everything in here. Tomorrow we do have JOLTS, right? So that's, there's the same, right? So the job, it's not like we can create more jobs. I think they're there, right? The services sector, if you're looking for a place to hide, the services sectors, think like hotels, even airlines, travel, that kind of thing, had been the most beaten up in general. So that's where there's still jobs. That's where there's still a rebound to be had. But it's rough right now, for sure. I'm gonna watch crude oil stocks, really, or the crude oil levels. So are we able to? How far are we dipping into these reserves? And I want to see vehicle sales. So I want to see, are we still spending more? I don't know. So, and I do a little filter. So we have a quick of the larger cap companies, 272 potential earnings trades on Tuesday for us, 389 Wednesday, and it just ramps really from there. Excuse me. Wednesday we do get ADP numbers, which have been a nothing burger. Really, like, they've been so far off. I don't think it moves any markets right now. That's usually a precursor to the NFP numbers, non-farm payroll numbers, that come on the first Friday of every month. We also have some other data, but really, the number one, this is the day, this is the moment right here that's going to make or break this market, in my opinion. I just, if he comes out and says 50 basis point, it doesn't matter what, I don't even know. Like, if he's aggressive, 75 basis point. The consensus, where the hell did that come from? That's not the consensus. I don't know what that is. Wait a second.
Wait a minute.
Yeah, that's not right. What's that? I don't know what that is. You could go to CBOE, has that site that does the consensus stuff. That's not the consensus. God damn it. Economic calendar. This is Wednesday. Last trade. Yeah, oh, no. This is literally saying the consensus is 1%. I don't know that that's right or wrong.
I don't know, yeah.
Yeah. Fed interest rate.
High.
Fed Watch tool. So this is that Fed Watch tool that you could take a look at. This guy, literally. So 75 to 100 basis point, or that's Okay, so they're thinking, I got it. They're saying that they're going to get to 1% by way of a 50 basis point hike. Okay, yeah, because before it was 50 basis points, then we're going to add 50 basis points, which would get us to 1. That's what that is. My bad. Yeah, I mean, if we get like a 75, that would be great. If he does something stupid, it's all about what the next one's going to be and what he says. So the conference is, and times here are on Pacific Standard Time. So apologies if you have to make the adjustment, but that is what it is. I'm on the West Coast, so 10 a.m. my time is, what is that? Eastern. 1 p.m. Eastern? Yeah, 1 p.m. Eastern. 1:30 is the actual press conference. So there's no time in the last year or two. Every time this situation happens, whether it's FOMC minutes get released and FOMC like the conference, the rate is like this moves markets. So expect, if you're going to be trading coming into Wednesday, I would expect today a lot of the hedging to start beginning. Um, I would say be hedged. Absolutely be hedged. Yeah, I don't know if it's going to fly. I don't know what's going to happen, but you're going to see a crazy whipsaw. No question. And typically on the actual release of the rate, you'll see a quick, very small, like a blip on the chart of the first move. That's usually fake. Don't believe that. And then that's pulled back. And then after that, the second move is the one that can really, really move markets. But this is going to be a day I'm going to be trading, but not coming into the press conference. I mean, we'll have a watch party, Steven. We have to do that.
Yeah,
If you're
absolutely.
yeah. So we'll do a little watch party, trading live. And it's gonna be wild. So don't miss it. Um, cool. So Thursday, I don't know if I'm gonna be around Thursday morning. I might have something coming on the calendar, but we do. This is again jobless claims, continuing claims, kind of a nothing burger for the week. Earnings 438. Right. We saw it's 389, 438. This is peak earnings for the week. So we'll have a lot of stuff to trade there. And then Friday, there's just a ton of stuff. Not a lot of earnings typically on Friday, but here's the weird part. So 4:30 a.m. Pacific, non-farm payrolls. This is the big number. Typically, this is not going to be anything compared to Wednesday. Not this time. I think the market's gonna. You know what happens normally on an FOMC like day is that we have a huge move, and then over the course of the next 2 days, that entire move is almost like completely reversed. If you go back and look at like the last 3 or 4, that's basically what happened. Um, so expect something like that. There will be um, amazing trading opportunities. Let's say that with volatility, and then Thursday just digestion day. I wouldn't be surprised if the whole thing gets reversed. And then this is where it gets to, if we were going to get a moment where we get to actually hear about what the trajectory of the next rate hikes will be, this is where 1, 2, 3, 4. I mean, 4 speeches. This is literally from 5 a.m. Pacific. I mean, past market close. So I mean, all day long, uh, they're going to be massaging whatever this messaging strategy is going to be. So we're in for a wild one. So this was that earnings system. So it's a system, right? I've got so many questions lately about like, are you looking? What are you expecting for this? What are you expecting for that? Or do you have this company on watch for? We don't do that. So this is a system that is just, it's a cradle to grave, like it's a scan essentially, very specific criteria. If you guys want, I might, like I said, ping me wherever it is on Twitter. On Twitter's at papergamesinc.com. Or not .com, at papergamesinc. I don't really watch the YouTube a whole lot. Maybe you could comment here. Or, yeah, Twitter's probably the easiest. Or if you're in Discord, I live in Discord, so find me in Discord. It's just like Paper Profit. That's my username. Or www.papergains.com. That's pretty easy too. All right, that's where we are. So cool. I got just gonna take a quick look. We're already way there. Look at this chop. All right, so I'm gonna move this to a 30-minute chart. That's typically my first view, and I've been saving these charts for you guys, so I haven't touched this at all. So these orange boxes here, so there's lots of lines, but the most important thing, this orange box here is an average weeks range. I like to have a 30-minute candle when I'm looking at the first view for the week. I can zoom out and I can get some pretty clear levels, right? So we were looking, right? Like a lot of people were hoping for this kind of situation. I don't see that happening. And we would kind of joke about it. You do get a bounce, right? So like what you can say is that you have a very clear prior demand level, let's call it, or support, whatever you want to call it, right in here. But right now, here's what we're in store for. Right now, everybody that bought here, they were selling here, they probably sold here, and right about now, all of these people are thinking, well, crap. Do I hold or do I sell? That's how you have to read this stuff, right? If you're looking at charts, try to read candlesticks, whatever you want. Anybody that bought in here, if they haven't taken profits, they're at break even and potentially about to go negative. So if we were to get a flush, it's gonna be any minute. That's just me. But you know what? I'm gonna pull that back and kind of give it to Steven. If you have any levels, I'm gonna use this average weeks range, and that would just take us. How many people have been talking about this 400 number? Quite a few, right?
Yeah.
And
all over Twitter.
Yeah, so an average weeks range would take us right there to tag that 400. And yeah, I have this dynamic. Is this your number? Because this is screaming at me right now.
What is? Yeah, 410 is something I outlined yesterday when I sent my levels or updates, whatever you want to call them, in Discord yesterday.
Mm-hmm.
So I'm really looking for 410 to break to signal that we are going to keep moving down.
Yeah.
415 was the level that was pretty significant for SPY last week. And then, we came right up to it, just barely touched over it, and then rejected that. Now we're floating right above 410 again. Outside of that, if we clear 415, it could move back up to like 428-ish would be the next level that I would, like the next significant level that I'd be looking at. Under 410 is really the big level that I'm watching, just because of how far away was that? Back in end of February, that's where we started to take off. 400's just a big psychological level. We haven't really been there since we first crossed over that level last year, almost exactly a year ago.
Yeah.
So we kind of came down, double bottom there when we first crossed over it, and then took off from there. So I can see 400 being a big magnet if we get below 410 to move towards. And then I just kind of be waiting around to see how price reacts once we get down to 400. I don't really see a ton of support below 400, but breaking below that would be a pretty significant move in my eyes.
For sure. Yeah, so like on the upside, okay, so average weeks range just under that 428, so like about 425 would be an average weeks range from this morning's open here. And that's exactly where we broke down before, so that would be a nice short level. But we've taken that one already. Are we? Man, we're about to dump right now. So this 410 right here, this is a 30-minute chart. we don't know that this is going to dump here. This is support. Let's be clear, right? I think that right now it could bounce, right? This is what Steven's talking about back here in April a year ago when we really took off. And I remember breaking 400. That was a big deal too.
Yeah, it was.
So odds are right now that we will probably just bounce. Um, that's what I mean statistically. The only thing, like if you're gonna short this guy, you want to see something, a candle like appear clean below, right? Like you want your what's likely to happen, and I'm just taking this wick from this morning. What's likely to happen is that you might get something like this, right? You want to see that, right? And then you want to see, so that would be red. Let's call this red, right? You'd likely see this big red. Actually going to matter, right? So if the candle after that comes in red, you're going down, and this is where you want to be taking that. Otherwise, it could very easily show up just like this, but we don't, we don't guess. This is going to be that kind of trigger level, and the same thing. So just, for now, we're testing this kind of low, right? If we get like we're facing, if this was coming in super hot, see these big, big fat candles, that's momentum, right? But right now, there are people buying this dip. That's what this should tell you. See these long wicks on the bottom end. There are people buying this dip. So pressing a bearish bet is a little. I'm not doing that right now. But if we see the break, yeah, if we see the break to the downside, you have that 400-ish target. You're down to like 397, 397, give or take. But not until then. You gotta wait. Otherwise, this whole situation is like hold and wait. Unfortunately, you have this giant outside candle. Well, yeah, huge selling pressure. Look at this. This one candle. If you guys read careful, this is gonna tell you a story. Like there's a battle going down right now. So I want to stay out of their way until I can really define an edge. So we'll see. Qs, I'm guessing similar. Is that about right? Or Qs have not been the best. If there was one index that's going to be more vulnerable to interest rates, high interest rates, and inflation, that's this guy for sure. Any of your growth stocks. It's just not. I have so many friends and family. Oh, can I buy Microsoft down here? I was like, dude, I love Microsoft, don't get me wrong. I love Google, don't get me wrong. Specifically, like the Asanas, like we use Asana here. I like the platform. I love the company, but it's just not the market for that type of stuff. It's just not the market for that high growth type of stock. So, yeah. So none of that stuff right now. I don't really know what else to say on that. It's just not what you want to do. Yeah. So Qs, I'm looking at 317.50 as this prior double bottom here. It's got to reclaim this before you can even kind of think that might have a chance to bounce. But if that does, then yeah, that would put you right back up to 330. Otherwise, same kind of thing. I have this like dynamic. Let's see. Oops. We get a lot of these broadening ranges right now on this market. So like broadening, like they're going up, up, up. It could go either way. I want to take that down. For now, we're just kind of in this channel downward. So again, kind of wait and see. We do this pivot here on this little chop zone. So one more leg. Really not that far-fetched by any means. Would take us down to about 295-ish, 290 on the Qs. And then we'll reevaluate. Yeah, if we close below this 311, is not good. Not good at all. So diamonds, great. These were like the most defensive last week. or just during this mayhem. Probably still going to be, but it doesn't mean that they're going up because they're not. Right now, yeah, see that we were looking at the Q, SPY. They were all below this last pivot of March. This guy is just now coming into that range. This is like your Boeings and things like that. Well, see, I'm not trading a whole lot of this. Are you trading these? I mean, right now.
I typically don't trade the diamonds.
Yeah.
I watch it, but I don't trade it.
Our futures traders might, for sure. Jesse, yeah. Yeah, we make money going down. I mean, good thing is that we're about to get a very clear, I mean, not that we're about to, like we are getting very clear trends. So trending market is great for a trader. You just have to fight that natural tendency to be a bull, unfortunately. IWM, wow, 185. This is a huge level, IWM. Oof, mid caps. So IWM mid caps, I mean, you're down 170 if that flushes. But one trend that does happen, and I've seen this. You guys seen Redbox? Our buddy Ryan, who's not on here, was all over Redbox at like, what was he on it at like $2 not that long ago. Penny stock. That thing is just flown. So my point is, RDBX. My point is that sometimes when this situation occurs, oh God, 850. Look at this, 42% up today. Get out of here, man.
I don't get it. I
don't get it either. All we know is that streaming's dead, right? But yeah, one of our analysts or traders, the group was like yapping at us about this at like 220, somewhere in here. And yeah, he's still holding on to this thing. Look at this, 40% today. Oof. If you're a penny trader, congratulations, because that is really. Is this gonna take another leg? Yeah. So what was I gonna say? So when the mega caps and things like that go away, people start looking for stuff to trade, and sometimes the pennies come into season, and this may be one of those times where it might not be bad to take a look at this stuff. Just saying, not my cup of tea, but it works. TLT. So we've been short TLT. I feel like we're probably pressing my bet. I'm pressing my bets right now. I covered a lot of it. That was a good open short right around here. So here we are, pretty much at targets. This is the bond itself inverse to the rates. So the logic was, okay, yes, this is already sold off quite a bit. Are you pressing bets? Yeah, probably. But at the same time, we have this rate decision coming up, and the market is like screaming for Powell to raise rates faster. If he comes out with some 0.25 base, like I'm done, right? Like I quit. That's ridiculous. What are you doing, dude? He'll probably come out with 50 basis points, and he'll probably say nothing about what the roadmap looks like. That's what's true. Or that's what I feel. And it's just going to be a big, giant disappointment. And we'll probably end close to where we started, but in the interim, we'll have all this massive chop in very tradable market. So that's likely. The TLT, so there's a long-term target way back here. So remember, this is inverse to the bond, right? So low here's the targets were 115. We're very close, very, very close. This is your kind of demand zone. So taking profits this morning just because we're so close, and we have that buy the rumor, sell the news, right? So bought the rumor down, rates up, right? The news, I think that we could bounce. So if you're in that TLT short, buy the rumor, sell the news. I don't want to hang on to this too much longer. So I'm out. Crude oil, on the other hand, this guy, a little bit rebound. I think this is what I'm talking about, this chop, right? So this is an average week's range. And we're trading within an average week's range. So you could do, and I was looking at this, I was teeing up something. It was like a USO. Look at this is USO. Like, look at that. It was June Iron Condor. which it would have been, was it 80, 85, selling an $80 call, buying an $85 call, so 80, 85 call credit spread, and it was a 75, 70 put credit spread, which would have given you this kind of pay range right here. It went all the way out to June though, but you were, so for $5 wide, I was actually able to collect like $260, which is pretty good for something like this that's chopping. So I might send that later. It's just one that it's going to take a long time. It's about 40 days out. So it will take a long time to actually pay out, 45 days, almost 42 days. Only one to do like a ladder strategy, like when you like do multiples, every so often. This is the dollar index. So this is, I think, where, if you want to see where's the money going, right? Typically it'd be going into like gold and things like that. Well, it's not. It's going here. The tradable ticker here is called UUP, and this is the dollar against the rest of the global currencies, and it's really like our rates are going up. That's great, but it's the inflation thing. I was talking to Buddy Cujo, who is on another radio show that we do. That I do. It's like I remember like, did you know that the dollar is more valuable than the euro right now? Like when does that happen? So the strength of the dollar is like, I mean, we're coming up on some serious highs, for sure. And I know Jesse's the Forex guy, but they don't, I don't know if they, well, he used to be a Forex guy. I don't know if you guys measure the same way, but look at this. You're coming up on some serious highs. The thing about this is that if we value U.S. stocks in the dollar, and the stocks are staying the same value, but the asset that we value them in is going up. Well, dollar's going up, strength, like this value of the dollar going up. Well, the stocks are staying the same. It creates this like, whoop, dollar up, stocks the same, dollar up, but it looks like stocks going down. So it's just one thing, right? Like, it's just, it is what it is. I know my buddy, we got a buddy who lives in South Africa, and they have the South African rand has lost like 50% of its value in a short period of time. Like, oh, geez. So, yeah. Are they holding dollars? That's what we're seeing. So, option traders, here we go. I'm going to get into the VIX. So, the VIX is hitting 35. This is our fear-ish like gauge. What I can say here is that this high, your option premium, meaning like how expensive or cheap an option is at any given time, is pretty high. So you want to use, then this is for holding options overnight, you want to use spread trades. It's going to be tough to get, and if you're not, you can buy at the close at the open. But at the end of the day, that's when you'll have the lowest premium, inflation, let's say, in your contracts, if you're looking to trade them. And in the morning, that's when they're most expensive. And that's because of that opening gap that we always have. Monday's opening gap from the weekend, always biggest of the week because of the 2-day in between. And so we have extremely high IV. So just be aware, if you're buying anything here and you're not in an epic move, like active move, you start bleeding out pretty quickly. But on the other hand, if you are in an active move, is specifically to the downside, day trading, this is day traders market. This is when you can get some serious exponential returns because IV is pushing so far up, and it looks like we're about to break.
Looks like we're breaking low.
It's about to break right now. Holy camole. And so this is the VIX. So you'll see the inverse. So the VIX, I just moved to a 5-minute. This is where you're showing it. This is last month's high, 34. What I would tell you, say as a general rule of thumb, if the VIX is over 30, I don't want to be bullish, let's say. I don't want to have a bullish skew on the market unless the VIX is under 30. So we're sitting at 35, and that's like pushing it. Sitting at 35, you can't be bullish here. I took a Facebook trade this morning, short, like up here, actually. And Ivy was coming in so bad. I was like, crazy. I'm a spread trader. So what I actually did was, and I didn't send this in the discords, but I bought like a quick 215 hedge call, and up here, and actually bouncing off this view up. What I was seeing is like, dude, I immediately sold a 210 call against it, and that gave me it's called a bear call spread or a call credit spread, basically saying, oh, you're not going to go over 210 on Facebook. And that thing paid out like pretty, like boom, fast, just as fast as buying a put would have. And I was like, oh, wow. So if you want the edge, is what I'm trying to say. The edge is like selling your credit spreads, especially early on in the morning. And this is just, look at this chop, right? Like here's your flush, already fighting back. You got to be quick with these right now. Already fighting. Cool. Let's take a look. Do you? So that was the majors. We could do. You do sectors. What I would say is like of the subsectors, I really didn't see anything jumping out at me. Not from a bullish perspective, at least. I'm still long OIH. I'm still long XLE. Doesn't mean that they're gonna really like go higher. I don't know that they are or not, but right now we're not flushing out. If we do flush out, then I'll be out for the short term. But I've had this position for, like way down here. So would I like to get another opportunity to pick it up down there? Yeah, for sure. But we'll see. USO, I think neutral USO, gold and GDX is one. So like gold, GLD. Gold. I just think like, dude, if Putin is selling all that gold, that's gonna be some artificial like market shenanigans. I don't really want to be in the way of this, so I'm not gonna trade my normal like GLD, SLV. SLV, same thing, right? It's like just was chug along and then just demolished. See you later, bye. So GDX, same thing. GDX needs gold to come back up to stay alive. So while I do like this gold miners, I know that GLD is going to be in the way, so I'm not going to take any bullish bets there. So not a whole lot, say in terms of the indices. So do you have any? Okay, so Tesla I had on watch. So what I'm looking at here, my typical setup is going to be, right, monthly here, weekly, daily, hourly, and then I'll do either like a 15 or a 30 minute. So 850 on Tesla, and this was one where I'm like, well, we don't really know if Elon's done selling or not for his Twitter acquisition, right? If he's not, and what did he sell, about 4 billion so far, we could have some serious downside to come in a very quick, short period of time. So
yeah, total dollar amount, I think it was like 8.5 billion
that he sold so far.
Yeah, in dollars. I don't know how many shares that
Yeah.
equates to, but it was.
But it's a 30-something billion dollar acquisition.
Yeah.
So I don't know how much cash he had, but let's say that's halfway through, and it's another $200 per share here. And I really did have like 700 or lower price target on this guy, if it does flush. It's actually right down here to the 6 something. I don't know. I had this $4, whatever, but you'd be right around this 620 ish area, right, where you have this prior. This is 700 here. So long story short, if you are trading below 828, this is the last week's candle, 821, you're going lower, and you're likely, well, you could have a little chop, you're likely going next stop just below 7, right here. Boom, boom. But that's definitely on watch. We're below the 200. I hate to say that, but there is a trade to be made, trade to be had, no doubt.
Mm-hmm.
A little stutter stuff at 750. I was looking at what it was a butterfly. It was like a 6 was a 7. Yeah, so May 20th, $700 puts have 2,000 volume on them. Ooh, of the May put series, holy what? Of the May put series, that 700 put has the most volume on it today at 2,124. So it's anchoring right around there. I'm actually seeing some people probably, there's some lottos out here. You got, what is that? 200 puts. And they're a nickel. They're just that's just like your lunch money, just in case. I don't think that would ever make you money. There's a 5,200 volume. I don't know what they're doing. Probably selling that. Who knows? What's the IV on this guy? 75th percentile. Just slightly more calls than puts. So 540,000 calls, 542,000 puts. All pretty much mid-market, in between. I'll just do this. So your biggest block orders of the day. Oh man. What is this? They bought those May 200 puts for a penny this morning. Like 5,000 of them. I see the order. All right, so they bought, 5,000 May 20th 200 puts for a penny each. Yeah, so they've 5x. Good job for them. Good luck selling it. I don't know if they will. Otherwise, there's July 675 put, single order for 401. That is part of a spread. I don't know which one it is, but let's say single order at 401. This was 36.58 each. That's a $1.5 million right there. Betteroni, and a ton of upside spreads. So not a whole lot of bullish action going on there. I know I want to take a look at Apple. So Apple already did earnings, right? So what I could say on Apple is like, man, if we fall off, this one has been showing the most strength. You guys remember this one was about 140, give or take right here. 138 was a pretty epic level. It was right there. That was a big breakout level. It was like boom, 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 straight away. And this is also going to be very, look at this, once, twice, 3, 4, right? So 1, 2, 3, 4, back and fill, pushed up, retest. So this 130, about 138, give or take. That's your actual support. That's not like, this is not this. What is this? 150. 150 is not a strong support level. I'm sorry. It's only been tested once. So
yeah, it's just a psychological level.
Yeah, it's just psychological level. So I really see Apple coming down quickly to 140 or lower. And I think that we could take a short trade if we can get a little bounce. So we're here. I mean, this is good now. I was going to say off this low, right? So yesterday's low or Friday's low is right here. Yeah, I mean, at this point, we're already tagging here. 154. We break this 154. See you later. Bye. Adios, brother. She gone to the downside. So let's take a look. I hate to be a bear, but man, there's money to be made. I mean, what the hell?
Right.
Holy what? Okay, so May 20th, 140 Apple puts for $1.50 right now. 9,700 volume. Okay, we're clearly not the only ones with this thought right now. That's just this morning. 9,700 volume. That's a good... Dog. It's not even that big. Like, it hasn't even really... Sorry, I'm pulling up detach. This is the option, so I'll pull actually. Let's see. Let me get here. The options are in full. 940. I'm gonna pull the whole. I gotta take this stuff off so you don't see these buy powers. Okay. Get out. So Apple, am I on Apple? Yeah. All right. So Apple Still 4,300 calls, and this is how I really just look at it. So 400,000 puts, 400, almost 40,000 calls. Um, percent out of the money. 42% of the calls are out of the money. I want to know if they're bought or sold. So when you're trading, right, if there's a bid and an ask, I click the ask to sell. So if it's at or above the ask, that means it's sold. You're about 40% on either side. So you can't really sell. You can't really see that. But 63 percentile, that's the first check, right? How expensive is it? That's going to be your current IV percentile. Option time and sales. This is an amazing tool in Thinkorswim. You click this little gear right here, 10. And this will show you the top 10 block orders just out of the gate. So July 165 or June 165 put. It's a single order. Are we getting this again? So the single order, let's call it, I'm just going to round 14,000 at, and you see at 13.30 each, right? No. No. Do you see that?
Oh yeah.
No. No. That's a huge bet. And it'll tell me typically if it's a spread or not, but it's not. Green typically, I think that means buy. No. Be a bear, baby. Be a bear. That's all I can say. Be a bear.
Yeah.
Be a bear. Get out of here. All right. Well, there you have it, ladies and gents. What I was looking at was right here. So I have this set at volume, right? And I can send this to like a quick chart off to the side, and we'll see. Quick chart. That's what I was going to try and take out. Quick chart, detached, right? And so this is your actual option. I just remove. This is not the stock, this is the option. So the option started at $1.24 this morning. It went down to $1.24 this morning. If I wanted to have a longer view, this is the option. Put option, so inverse from the call, from the stock. Dude, Friday this was $40. Yeah, you get a flusher straight to 250. I mean, this could be. So if it's a $140 put, this is one of those where you don't want to hold it, right? What was the big one? June 165.
Yeah. Yeah.
Oh, it's already in the money. Oh, and it's getting bigger. Oh, yeah. So they might be buying this and selling that May. If you're a smaller account, you can just buy this May and then play as it's breaking lower. If it's breaking lower, and just like trade in and out of it. But that's a good one. You want to see that kind of heavy volume. That's a good one to kind of play with, anchor on. Otherwise, 150 here, I don't think it's good. You never know. Oh man, they're already, what is this, 145 puts? 150, 145 put debit spread for this week. $100, risking 90. The max value here, it's $5 wide, so the max value is 500. Risking let's call it 100 to make 400. That's what you are there. It's actually pretty heavy. I'd like to get that cheaper. 145. I still like that May, and you probably anchor here and make some kind of calendar out of that. Anyways, that's where we are. I think that was the easiest, like most blatant. Jesse, do you have, if you're still on? I know he sent like a. Can I give a shout out to Mac? I love this drawing. One of our guys did that. That was awesome. Stevenson, it's the great white. We're going lower. Yeah, Jesse had monthly inside calendars. XOM, Hoover. Yeah. Datadog we know. I think Datadog and them, they're going to report this week. XOM. Yeah, so this is the monthly prior month inside. What did Buffett buy? A ton of Chevron recently. I think that was all the rage. He was bad mouthing Bitcoin again, doing his thing, which is fine. I heard that one.
I saw something that he bought a ton of Activision.
Yeah, so he bought a bunch of Activision. I read that because it arbitrage, right? So because their purchase price is what, 95?
I thought it was in the 80s, but I could be wrong.
Well, yeah, you'd want to find out. Yeah, boost to 9.5. Oh, he's got a ton. Yeah, 95. So Microsoft announced January that it planned to acquire Activision for $95 a share. So it was they say arbitrage, right? So it's just trading lower than it should. Not a bad idea. See? Easy money plays. And he'll just sit on it. If it goes lower, he'll probably buy more. Yes, sir. All right, I think that's it. I think we're good. We got a lot out there. If you guys have any questions, feel free to find us. Ping me on Twitter or in the group or wherever you can. Cool. Adios.
Sounds good.
See you next week.